MMTs 8/3/2011. This is the end of the trading session day. We have about 33 minutes. On the opening bell, right here on August 3rd, 2011, 12:27 p.m. right now. When we started the day out, we talked about high frequency volume trading. We talked about short-term oversold. We talked about the pricing control mechanisms at the bottom and how things would turn. We went straight down. Once the bottoms were put in, the indexes were putting in their bottoms, like the Dow and the NASDAQ and whatnot. And we've had a complete over 250 point swing in the Dow. The main thing of it is that the same trade that happened on all of them within the NASDAQ 100, Apple as well. The high frequency turns were right here in the price action. Then they consolidated the wide teeny, meaning that the price volatility was much more than any time since you've been in the MMT trading school. And that you could clearly see here that once we put the bottom in, how that turn started. We went down almost a half delta, which equaled 7.75 teenies, minus $8.77 to the wholesale price. We came from 0.58 all the way up, making highs right now at 0.56. That's plus $10. That's $18. You're buying $8.77 wholesale in your market maker application, and now you're up. And the price volatility is that when that didn't go down, that was going to make a move. And the intraday range between that low number and this number here is 1.04. And we know that a teeny is $1.13 per line. Therefore, that's the 10 teenies is over $10, or 8.94 teenies equal $10.11 right now. And we just made the intraday trend ratio high. Now, MMTs, it's the first time today that high frequency computing volume came in, where the computing volume came in from those machines that were built to increase price volatility, as they do. And so when that turn happened down there, that meant that everything was turning at one time. And the indexes were turning and churning off their bottom because they were oversold. And we got to a stage that on the first pass today would be the confirmation that the market's trying to put in a low on its first attempt. And in order to validate that, there has to be a high reversal off of bottoms in all indexes. And then we're going into the close, and we're going to see here, we only have 30 minutes left, and that last two 15-minute bars of price action left is how we close up at the top. That's one way of confirming the confirmation, MMTs, as you've been being taught. And not only that, the strength within the price actions and the rules and regulations in price action breakouts is how do I identify the strength of the move. That's this original breakout. Well, because we're consolidating in here. Yes, it's wide teenies, 1, 2, 3, 4, 5. That's $5 and some odd, almost, $5.80 here. But you can see that when you don't break the half breakout bar over here, and that you break back up toward the highs, but you don't break the teeny low here, that the teenies are getting higher in price action. And the consolidation says that this strength is validated here, that you're just not going to collapse because you're not descending in the value, metric value. So therefore, you're breaking and ascending in the other way. And so you don't sell out too high, or you don't pass it up here, but you have to understand the validation of the price action and how breakouts follow that validation. And we can clearly see that we've had numerous of them today that we have transacted and worked with, and they've done quite well. The shorts down on the opening bell. Once again, when you look at this chart right here, this was that down move of that short. They shook them all out Everything got into a bottom, and we're right back up at the highs of where yesterday's collapse was to this bottom. Right up here. This teeny line right across over here. That was August 2nd. And basically, mathematically, within the movement, price movement action, descending value here, and then the very same MMTs, the very same price action ascending value here as it was. And we're just about at the equal distance of both moves. Yesterday's volatility, down called downside, short volatility where you make money, and then the upside volatility in a mathematical price action breakout within the SMF MMT market maker platform is here before us right now. We can't deny that, nor can we deny the price action, because it was everything that we wanted with extremely high price volatility that the public would not know how to wade through. They don't know how to go through this. Too much emotion gets caused with the regular retail traders always. It's very hard for them to walk through something like that. This is yesterday's mathematical move down and today's mathematical breakout back up. There was descending values working this way, and there's ascending values working that way. And if you combine the two trades together, well, you make a lot of money in volatility. High frequency volume, price action volatility. Learn to master the strength. Today was the best day that we have had on that left elbow shakedown. That means that short down. And we got down to the key metrics where markets were made, and they stepped in. Look, they turned. They also turned down, and they were sold down that way, but they also turned up, and they were bought up and bid up that way in the transaction tape. And that the platform that we use as MMTs, our information is correct and true and accurate based on the ratios that are traded and what those negative ratios equal in dollar amounts and how the system calculates it. Welcome to the wonderful world of Google, one of the strongest intraday trades of recent. Price action volatility, high frequency volume trading. Once again, the public does not know how to go through that move nor get that move. It's usually they're only one-way thinking. There's a one-way ticket instead of a two-way ticket. Round trip is price action volatility, price action weakness, price action strength. They all have the meaning. The MMT Market Maker platform describes it in real live action entry, and everything is working right with the price and correlated to the top. And it establishes the key ingredient between the buyer, the seller, then the exchanges and indexes and indices and so forth and so on.